In this video, we are going to decode the MACD indicator and learn trading strategies to become profitable. This guide is for both starters and advanced traders. Stay tuned to master this powerful indicator. These are the topics we will cover in this video. Let's start by understand what is the MACD indicator. MACD stands for Moving Average Convergence Divergence. The indicator is formed by three components: the MACD line, the signal line, and the histogram. Let's discuss each of them in depth. The MACD line is our blue line. The MACD line is a representation of the 12 and 26 EMA. If the 12 EMA is above the 26 EMA, the MACD line stays above the horizontal line known as 0. And when the 12 EMA drops below the 26 EMA, the MACD line will go below 0. Our next line is the signal line. The signal line is simply a 9 EMA of the MACD line. The signal line is used for trade entries on the line crossover with the MACD line. And finally, we have our histogram. When the MACD line is above the signal line, the histogram turns green above the 0 line. This indicates momentum of price going higher. And when the MACD line is below the signal line, the histogram turns red below the 0 line, indicating a downtrend in price. Now let's learn some strategies to trade the MACD indicator. The order will go from easy to advanced. The first strategy is using the histogram alone. The histogram is a perfect indicator to recognize trends. When price trends and momentum picks up, the histogram candles grow in size. We should look for entries in the direction of the given trend. When momentum slows down, the histogram candles decrease in size, indicating a high chance of a trend reversal. The next strategy is the MACD crossover. The MACD crossover can help us get the best entry prices possible according to the trend price follows. When the MACD line crosses above the signal line, it signals a good buying opportunity. And as we can see, it follows the price nicely. We can also see how the histogram has turned green and starts gaining momentum. And when the MACD lines crosses below the signal line, the indicator signals us we should look to close our buys and eventually look for sell positions. We can also see on the histogram that notifies us the current trend is about to end. Let's take a look at another example, this time with more details. Please pay attention. This is the Apple stock on the daily time frame. By applying the MACD indicator, we can see how price behaved related to our indicator. First off, the MACD histogram candles were small. Remember what that means? It shows decreased momentum. And what does decreased momentum signifies? Indecision in price is the answer. In this case, we would like to look for closure of the past buy positions, securing profits, and wait for the next signal. Then the MACD line crosses below the signal line. At the same time, the histogram candles turn red and grow in size. This can give us confidence to open a sell short position. Then, the histogram candles prints red candles that are getting smaller in size. There is our first signal that we should look to close the sell position soon. This process can be repeated from multiple small trades, meaning we sell short here and close here. Or we can also keep the position longer if we have confidence price will keep moving down on the longer time frame. Keep in mind that the previous trend plays a big impact in this situation. In our specific case, the past trend was a bullish one, so it's better to take small scalping positions and build up buys on big green histogram candles, coupled with a great MACD crossover, just like in this situation where we should look either to close our sells, either to open buy positions, and the opposite for bearish cases. We would like to buy long the micro trends and sell short the macro trends. Now that have built a knowledge base, we can level up and learn more advanced techniques for the MACD indicator. The divergence strategy involves the price of the asset moving in the opposite way of what the indicator shows. The divergence is useful in indicating two things. 1. A buildup of momentum coming into a trend. And 2. A possible trend reversal coming very soon. There are two types of divergences. The regular, in an uptrend, we look for higher highs in price and lower lows on the indicator. This can be interpreted in this way, explained in a very easy way. The price keeps going up while the indicator keeps going down. And during a downtrend, we look for lower lows in price, but higher highs on the indicator. Do not worry if it seems complicated. With practice comes knowledge, and you will be able to spot these in a blink of an eye. One tip I can give is using the line chart instead of the candlestick chart to identify these divergences. It is a bit easier to notice since the indicator is also a line. It's easier to compare them. This strategy can be combined with price action trading to increase the chances of getting a better entry and to avoid fakeouts. Let's look at a more advanced example. This is the euro-dollar forex pair on the 4-hour time frame. We start by asking ourselves some questions. What is the trend? What does the chart says to me? And how can I use it to my advantage? Always start your trading day with these questions. In this case, we see the euro doing the basic formation of a downtrend, lower highs and lower lows. The MACD line just crossed below the signal line. If we were having buy positions, this is the perfect time to get out of the buy positions or start opening short sell positions. Now we have two confluences to decide where we would like to close ourselves with profit. We have this trend line acting as support and resistance. Then we look at what the MACD indicator is doing. Look, there is a bullish divergence. The bullish divergence signals us the downtrend is close to an end. Using the confluence of the trend line, we wait for the price to break the trend line, and combined with MACD that is gaining momentum and the oscillator lines going up, we can start closing our sell positions here with a profit and eventually even opening buy positions. See why this indicator is powerful. It warned us about a trend change before it happened. Now price has reverted to an uptrend, characterized by the simple candlestick pattern, higher highs and higher lows. The second type of divergence is the hidden divergence. A bullish hidden divergence is characterized by price forming higher lows and the indicator forming lower lows. Just like in happens on the chart. This signals continuation. Please remember, the regular divergence signals a trend reversal and the hidden divergence signals trend continuation. And a bearish hidden divergence is characterized by price making lower highs and the MACD making higher highs. And this is how it looks on the chart. And again, this gives us a confirmation that the trend will continue. This is everything you need to know about the MACD indicator. It will take time to get used to identify trading opportunities. Take notes and feel free to watch the video as many times as you want to master the strategies presented. With practice, you can learn how to implement this powerful indicator into your trading strategy. Lastly, congratulations. You have finished our guide. If it helped you, make sure to give us feedback in the comments, and thank you for watching.